Hello, everyone. Today, we're going to discuss the significant tax law changes brought about by the recently enacted One Big Beautiful Bill Act, often referred to as the OBBBA or simply the Big Beautiful Bill. This legislation, signed into law on July 4th, 2025, introduces notable federal income tax deductions for both overtime pay and tips, impacting millions of American workers. Our goal today is to break down these changes, explain who is affected, how it works, and what you need to know for your financial planning, particularly for tax years 2025 through 2028. The One Big Beautiful Bill Act is a comprehensive piece of legislation. While it covers many areas, our focus today is specifically on the new provisions affecting how overtime pay and tips are taxed at the federal level. Crucially, these are deductions from federal income tax, not exemptions from all taxes. It's also important to remember that these provisions are not permanent. They are set to sunset at the end of 2028, meaning they will expire unless Congress takes further action. One of the most talked about changes is the new federal income tax deduction for tips. This is a direct benefit for many workers who rely on tips as a significant part of their income. The $25,000 cap is a substantial amount for many tipped employees, effectively reducing their taxable income. We're awaiting the official list of qualifying occupations from the IRS, but we expect it to include roles like servers, bartenders, barbers, hairstylists, and delivery drivers. It's vital to differentiate between voluntary tips and mandatory service charges, as only the former typically qualifies for this deduction. The second major provision is the deduction for qualified overtime compensation. This is designed to benefit hourly workers who frequently work more than 40 hours a week. The deduction specifically targets LSA-mandated overtime, which is typically the time and a half rate. The half portion is often the focus of this deduction. While the deduction can be significant, it's crucial to understand that it applies only to federal income tax and has the same income limitations as the tip deduction. Exempt employees, generally those paid a salary who are not subject to FLSA overtime rules, will not benefit from this deduction. This is a critical point to emphasize. The One Big Beautiful Bill Act does not eliminate all taxes on overtime and tips. Workers will still see Social Security and Medicare taxes withheld from their paychecks and applied to their tip income. These are distinct from federal income tax. Also, if you live in a state or locality with an income tax, your overtime and tips may still be fully taxable under those laws. This new federal deduction does not automatically trickle down to state or local levels. Finally, remember that the deduction specifically targets cash and charged tips. Non-cash tips, while less common for reporting purposes, are still considered taxable income. For employees, it's important to manage expectations regarding when you'll see the financial benefit. For the current tax year, 2025, you generally won't see an immediate change in your take-home pay. Your employers will continue to withhold federal income tax as before. The real benefit for 2025 income will be realized when you prepare and file your federal tax return next year, where you can claim these deductions. Looking ahead to 2026, we anticipate the IRS will update its withholding guidelines, which could mean lower tax withholdings from your paychecks throughout the year. Regardless, diligent record keeping of your tips and overtime hours will be crucial for accurate tax filing. To truly benefit from these new tax changes, both employees and employers need to be proactive in their planning. For employees, meticulous record keeping is non-negotiable. This will ensure you can accurately claim your deductions when filing your return. Given the nuances of the phase-out rules, consulting with a tax professional can help you understand your specific situation and optimize your tax strategy. For employers, reviewing and potentially upgrading payroll systems is crucial to meet the new reporting requirements. Staying abreast of IRS updates will be paramount to ensure compliance and accurately implement new withholding rules. Ultimately, effective communication within your organization will empower everyone to navigate these changes successfully. To summarize, the One Big Beautiful Bill Act represents a notable shift in federal income tax treatment for overtime and tips, offering significant deductions for eligible workers. However, it's crucial to distinguish this from a full tax exemption, as FICA taxes and potentially state-local taxes still apply. The immediate impact for 2025 is primarily on tax filing, with potential withholding adjustments coming in 2026. We hope that you found this video informative, and we would appreciate it if you would like and share this video and subscribe to our channel. Thank you.